So my expectation is the recession's coming. It's going to be really bad. Inflation is going to come down fast, but not quite fast enough for the Fed. They're going to keep raising rates into early 2023, destroying demand, raising unemployment. And we're going to wake up this winter, although you can see it coming today, we're going to wake up this winter with a severe recession, high unemployment, and a much lower stock market.
Hey guys, welcome to Investilence. Today we are going to talk about the current economic situation in the world and discuss whether this upcoming recession will be any much similar to the crisis back in the 2008s. Today's guest, Jim Rickards, will be talking about the recession and financial crisis of 2008 and how today we are seeing both recession and financial crisis happening in our own lives. Whether this recession and financial crisis will be even bigger or will it even happen is the biggest question. Before we jump to the clip, please don't forget to press the like button and subscribe to the channel. If you enjoyed the content, we post everything related to finance and investing. That being said, let's see what Jim has to say.
It's important to remember Jay Powell is not an economist, he's a lawyer. And lawyers, one of the reasons people don't like lawyers is they actually think about things differently. You go to law school to kind of get brainwashed in a benign way. But they're better at looking at both sides of the issue. They tend to be, if you're Jay Powell, fairly articulate. Jay Powell's a Republican. And he's looking at his legacy and he's saying, do I want to be Arthur Burns, who was considered a great failure because he let inflation get out of control? Or do I want to be Paul Volcker, the man who is, considered a hero because he crushed inflation? Well, he'd rather be Volcker. That's kind of obvious, but let's remember the costs. Let's remember what happened to crush inflation. Unemployment was well over 10%. It was like 11 or 12%. This is in 1981, 82. Those are depression level unemployment rates. But inflation did come down, but basically had to trash the economy to do it. And Powell kind of said that may be what it takes. Maybe not that bad, but much higher unemployment and a severe recession. So far, what I just described is not the same as 2008. We may have a very bad recession, possibly worse than 2008, but just a recession. Now, let's take the financial crisis component, because I said they're two separate things, but they can converge, and they did in 2008. So that's a good for the millennials. I have three millennial children. I say, okay, well, what are the odds of a global financial crisis? Bearing in mind that that's different than a recession. Uncomfortably high. So we may end up with both, and this may start to look like not 2020, which is, I don't know what that was. That down 30% in 2 months, March and April 2020, and then up 34% in the third quarter. I mean, what was that? Well, that's what happens when you turn off the lights. That wasn't a business cycle. It wasn't about inventory or interest rates or anything else. It was just, hey, we listened to a phony like Fauci and shut down the economy. And I really fault Trump for letting that happen. But that is what happened. So that's such a one-off that it's kind of hard to use that as a model. But 2008 is a model, you're right, Julia, and that may be what we're heading for, bearing in mind that these are two separate vectors.
Also, it is worth talking about the dollar currency. As of today, the dollar is hanging in strong, outperforming most of the currencies, but is it sustainable, and why is it holding up strong, despite the ongoing recession? Well, the answer to this may lie in the fact that other nations' currencies are dealing with the recession way worse than the US, but Jim also sees one problem the dollar might be facing, which is associated with gold. Let's see what Jim has to say about that.
But August 2011, the dollar was at an all-time low. And not coincidentally, gold hit an all-time high at the time, $1,900 per ounce. It's gone higher since then, but at the time, so dollar's low, the dollar value of gold is high, all-time high. Makes sense, right? Because I always say gold, people say gold's up or gold's down. And I say, no, gold's not anything. It's metal. It's atomic number 79. What changes is the value of the dollar. When people say gold is up, what they really mean is the dollar is going down, which is the case. Today, we're in the opposite situation. And by the way, gold prices have been coming down, rallied a little bit recently, but it's down from $2,040 an ounce in early March 2022 to today it's around 1750, give or take, but it's been as low as 1650 fairly recently. But that's what you would expect if the dollar is this strong, which it is. So the dollar's not at an all-time high, but it's getting there. It's the highest in over 20 years. People talk about the euro at 98 cents. That's about where it is. I was skiing in the Swiss Alps in French Chamonix on the French-Swiss border in 2000, and the euro was 80 cents. And that was the all-time low for the euro. And we had vacation, two family. We'd go out to dinner, have like a 4-course dinner and wine and tip and everything. We couldn't spend $100. We tried, but we couldn't do it because the euro was so cheap. We're not quite there, but we're getting closer to that level. But what happened the last time the dollar was this strong before 2000? Well, it was 1985. That was the Plaza Accord. And that was back when, it wasn't there were 5 people there. It wasn't exactly the G7, but pretty much of an overlap. And James Baker convened the meeting at the Plaza Hotel in New York with the finance ministers of, Japan, Germany, UK, France, and I believe Switzerland was there. And they orchestrated the decline of the dollar. The dollar was too strong. It was hurting U.S. exports. It was importing deflation, believe it or not, because we were trying to get, but by then the inflation had died out by 1985. It was down to around 2%. So we were importing deflation. They didn't want that. And so the question today is the strong dollar. Well, the strong dollar is doing the same thing. I looked at the markets recently, and what I saw was, stocks were down, bonds were down, gold was down, silver was down, the euro was down, NASDAQ was down, everything was down. And I said, how can that be? I mean, some things go up, how can everything be down? And the answer was the dollar was up. And everything I just described, oil was down also, but everything I just described, oil, copper, gold, stocks, etc., they're all denominated in dollars. So it shouldn't really come as a surprise if the dollar is that strong, that the dollar price of everything else would be lower. And it's a very deflationary trend. And by the way, that's another contributor to the deflation, which will soon replace the inflation that we just talked about. But here's the hard part. Janet Yellen doesn't know anything about this. I mean, she's a labor economist, sort of, and a statistics geek from Berkeley. She doesn't know anything about monetary policy. It turns out she doesn't know much about fiscal policy either. She's running around talking about equity and climate change, so that's fine. But there's no James Baker, there's no George Shultz. Where's the leadership and the gravitas and the authority to be what Tim Geithner, and I talked to him about this, he calls it the convening power. Convening power doesn't mean you can force all the solutions, but it does mean you have the authority to convene the meeting, bring a group together and talk about it. So where's the leadership? Where's the convening power to have a new Plaza Accord? Can we stabilize exchange rates? Can we bring the dollar down a little bit? Can we just put gold back in the equation? Maybe not a strict gold standard, but just as some kind of benchmark to help us think about what we're doing independently of other currencies. And by the way, most currency indices, so a DXY, which the Wall Street Journal uses, Bloomberg Index, the Fed has a couple good indices I use. All of those indices tell you if the dollar is stronger or weaker compared to other currencies. And it's heavily weighted to the euro. And yeah, the euro and the US dollar together are 80% of global reserves. And so that makes some sense, but you're in a bubble. It's currency to currency. Well, what if they're all going down against something else, or they're all going up against something else? What's the something else? What is the benchmark or the yardstick that we can use that's not a currency? And the answer is gold. I mean, that's you get accused of being a gold bug or whatever, and I don't expect a gold standard anytime soon. But just objectively, analytically, that's the only thing you can use as a yardstick that's not another currency. And right now, gold's been going down, which tells you the dollar is way too strong. But I don't see. It's a problem. It's a problem for the rest of the world. Certainly, if they have dollar-denominated debt, Turkey, we mentioned Argentina and China and a lot of others. It costs you more in your currency to convert to dollars to pay off the debt. And that, of course, has a feedback loop because it increases the demand for dollars, which makes the dollar even stronger. So it's a very, and this goes back to what we talked about earlier with foreign exchange rates being a conveyor belt that moves problems around the world. That's exactly what's happening. So the whole world is suffering from weak currencies, suffering from a strong dollar. The dollar is deflationary from the U.S. perspective because stuff we buy costs less. We need fewer dollars to buy it all. But it's the opposite for everyone else. In their local currencies, it's highly inflationary, and they're going to start to go broke and default on debt. But the real problem is I don't see any leadership, and I don't see even much awareness of the problem. And finally, I don't see any interest in using a benchmark like gold or even a commodity basket, which the BRICS are talking about, as an objective measure of what currencies are really worth.
And that's it for today. Let us know your thoughts down below. What do you think will happen in the near future? Will we see a huge recession? Will the dollar remain strong? Or will it plummet just like the other currencies? This was Investalence, and we'll see you in another video.